Most first-time investors don't hesitate because they're lazy or bad with money. They hesitate because they're scared of one thing, making the wrong move and regretting it for years. And that fear makes you do the exact two things that cost beginners the most. You overthink until you miss your moment, or you jump in fast and panic the second the chart turns red. So in this video, I'm giving you a simple, no-regret $500 plan made for real beginners. A plan you can follow even if you're nervous, even if you don't trust yourself yet, and even if you've never invested a dollar before. By the end, you'll know exactly what to do with your first $500, what not to do, and the mental rules that stop panic selling later. Here's the promise. You'll leave with a plan you can copy exactly. No guessing, no maybe, just a calm system. First, we need to say the truth out loud. The biggest danger with your first $500 isn't losing it. The biggest danger is doing something that makes you scared of investing forever. Because if you invest $500 and panic sell a week later, you don't just lose money, you lose confidence. You start telling yourself, see, I'm not built for this. And then you quit. That's the real loss. So this plan has one goal: help you start in a way that protects your confidence. Before we invest anything, we split money into two types. This is simple, but it changes everything. There's soon money and later money. Soon money is money you might need soon. Rent, bills, food, emergencies, car repairs. If you might need it in the next few months, it's soon money. Later money is money you can leave alone for a long time, at least a year, ideally longer. Here's why that matters. The market can drop at any time. If you invest soon money and the market drops, your brain will feel trapped. It'll scream, pull it out, you might need that, and you'll panic sell. But if you invest later money, a drop feels uncomfortable, not dangerous, and that difference is everything. So if this $500 is the last money you have, don't invest it. Build your emergency buffer first. But if this $500 is extra savings you can leave alone, you're ready. Now let's build the no-regret $500 plan. It has three parts: the safety anchor, the growth engine, and the calm rules. Part 1 is the safety anchor. Out of your $500, take $100 and put it into a high-yield savings account. I know you want to invest. I know savings feels boring.
But this $100 isn't meant to make you rich. It's meant to stop you from panicking, because life will hit you with something unexpected. And beginners often do the worst thing at the worst time. They sell investments when the market is down just to get cash. This $100 is your I won't panic money. Think of it like a seatbelt. It doesn't make the car faster, it keeps you safe when the road gets scary. So, $100 into the safety anchor. Now we have $400 left. Part 2 is the growth engine. This is where your money actually starts growing. For beginners, the simplest growth engine is a broad index fund. An index fund is like a big basket. Instead of picking one stock and hoping you chose the winner, you buy tiny pieces of hundreds of companies at once. So if one company has a bad year, it doesn't destroy you. This is why index funds are beginner-friendly. They're built for people who don't want to gamble. So out of your remaining $400, put $300 into a broad index fund, like an S&P 500 fund or a total stock market fund. The exact ticker matters less than the type: diversified, low cost, long term. And here's the surprise most beginners don't realize. The goal of investing is not to be clever. The goal is to stay consistent. The market rewards the person who can stay in the game. So we keep it boring on purpose. Boring is powerful. Now we have $100 left. This is where many beginners get trapped. They feel like they need something exciting, a big win, a risky bet. But your first job isn't to get a big win. Your first job is to build trust in yourself. So with the last $100, you have two good options. Option A, keep it as extra buffer cash. Option B, put it into a bond fund if you want your portfolio to feel steadier. If you want the simplest version of this plan, keep it in cash. That's completely fine. If you want to learn how balance feels, bonds can help reduce the emotional roller coaster. They don't usually grow like stocks, but they can help you stay calm. And calm is what keeps you invested.
So now your no-regret $500 plan looks like this: $100 safety anchor in savings, $300 growth engine in a broad index fund, $100 stability pad in cash or bonds. That's the money plan. Now we built the mind plan. because this is where people either win or quit. Part 3 is the calm rules. Rule 1, you do not check the market every day. If you check daily, your emotions will live inside the market, and the market is not designed to make you feel calm. So you set a rule. You check once a month. Not because you're ignoring reality, because you're protecting your brain. Daily checking turns investing into a slot machine. Rule 2, you decide your selling rules before you invest. Because when fear hits, your brain will lie to you. It will say, this time is different. It will say, get out now. So decide now while you're calm. Here's a simple selling rule. I only sell if my goal changes or I need the money for something planned. Notice what's not on that list. Headlines, panic, vibes, fear, or a red chart. Selling should be planned, not emotional. Rule 3, you use a 48-hour pause before any big money move. If you feel the urge to sell, switch, or do something dramatic, you wait 2 days. Because fear is a body state. When your heart is racing and your stomach is tight, you're not in a good place to make long-term decisions. So you wait. No selling, no switching. Just a pause until you feel normal again. Rule 4, you turn on autopilot. Beginners think investing is about discipline, but discipline runs out. Structure doesn't. So if you can, automate even a small amount. $25 a week, $50 a month, whatever is realistic. Automation removes the constant debate in your head. If you manually decide every time, fear eventually wins. If it's automatic, you keep investing even when you don't feel brave. Now, let's talk about the moment that scares everyone. What if you invest your $500 plan and the market drops next week?
This is where most beginners break. So here's what you say when you see red. You say, this is what investing looks like. Not I messed up, not I'm unlucky. This is what investing looks like. Then you say, a drop is not a loss unless I sell. That sentence saves people because it stops you from turning a temporary dip into a permanent mistake. Then you say, if I keep buying, I'm buying on sale. Because if you believed in your index fund yesterday, you still believe in it today. The price is simply lower. And finally, you say, I don't make big money decisions while my body is in fear. That's the line that protects your future. Here's something most people get wrong. Wealthy investors aren't calm because they never feel fear. They feel it too. They just have rules that stop fear from driving the car. They don't win because they avoid every crash. They win because they don't get knocked out by crashes. And your first $500 isn't just money. It's training. Every time the market moves and you don't panic, you're building a new identity. The kind of person who can hold. The kind of person who can play the long game. That identity is worth more than any stock tip. Because once you have it, you can invest $500, then $5,000, then $50,000 without your brain sabotaging you every time the chart turns red. So let's sum it up. Your no-regret $500 plan is simple. Put $100 into a safety anchor so life doesn't force you to sell. Put $300 into a broad index fund as your growth engine. Put $100 into a stability pad so you stay calm. Then follow the calm rules. Check monthly, decide selling rules early, use a 48-hour pause, and automate contributions. The market is not your biggest enemy. Your biggest enemy is the part of your brain that confuses discomfort with danger. And once you see that, you stop fighting yourself. You start investing with a system you can actually stick to. Now tell me in the comments, what scares you most about investing? Losing money? Feeling stupid? Not knowing what to do? And if you want more beginner money systems that feel calm and doable, subscribe. You don't need to be fearless to build wealth. You just need a plan you won't regret.